So we had a particular session, as you guys know, where we open up on a day where there isn't a lot of volume, and yet the market starts to sell off. And you could just see the longs having a lot of trouble picking a bottom. And there were moments where they could go now, they could go now, more selling would come in. And it's like we talk about a lot. You could take your entire week, your entire day, and bust your you know what looking for trades. And then there are times when you're patient, the trade finds you. Obviously, your strategy, your setup has to be defined. It's got to have a progression, but there are trades that find you. And sometimes, unfortunately, we get beat up. And then when that trade finally finds you, you're like, why didn't I just wait for this one? And the other ones didn't look like this one, by the way. So this was one of those examples where we're selling off in this particular sequence for the first half hour or so after an open. And we break it all the way down to, and you could see if I just roll this back and forth out, they're trying to take it higher. They're trying to take it higher. They can't. They couldn't get above all of these longs that puked. And they used the top of that as resistance. And then they make another run of about 10, 15 points. And look what happens. See all these red lines? We'll make sense out of it. Each red line's an iceberg order, which means the guy's only showing 10, but he's got a lot more than meets the eye. That's the definition of an iceberg. It's red, so it's on the sell side. There's three of them. There's one up here, there's one here, and then there's one here, all showing 10 contracts. This one actually got filled, but these two are actually showing 10 contracts. He's done 307 here, and he's done 910, but he's got more left. How many more left? We don't know until he's finished, but we know he's showing 10 and we know how much he's done. When he moves it, when I say he, whoever's working this order, if they chase it and move it down, right? A sell order moving down is chasing price. Generally, it's a high probability that we pop. And so now you see these two lines down here, but I'm going to rewind it and you're going to see when those lines appear and how do you know they're the order above being chased lower. I'm going to pause it. And the way we know is with what you see in the order. See the 18-2? That means it's the second time it's been moved. This 18-1 got moved from above. And now it's this order lowered all the way to 38.50. Still showing 10. He's done 307. That's here. The balance will show up in this middle section. So once it gets filled, you'll see how much he's done total and how much he's done at each price. Right there, he gets filled. He's getting filled. When he's done, an asterisk goes on the end of it, and he's done a total of 811 and 504 at this level. Now, another interesting thing happens because we know there's another one of those above. Is that one going to be chasing price? And then sure enough, you'll see another red line that comes in. That'll have a -1 because it's this order above that was lowered. Remember, it did 950. Now he's done 40 more at this level, and you'll see as I play it, that's what he did all day. He only had 40 more left. He did 910 at that level above. He only had 40 more got filled. And right in here, it's like when you get an offer of decent size, chasing price down, generally after it gets filled, it's a beach ball underwater. It's able to pop. One of the reasons why we broke about 30 points after the open on a slow kind of volume-wise overnight session, there must have been a lot of selling that had to come in. And this was like the last hurrah of it. And then the market was able to go up pretty effortlessly, and the upside was the right side for a while. So instead of the longs having trouble, it's now the shorts having trouble. And then you often get people that are fighting it all the way down long, and then they start getting short and they're fighting it all the way up. So they get burned on both sides. This is letting the trade find you. It doesn't mean every time you see an offer chase the market or price down, it's going to pop. It's just a probability. And you're waiting for it, and it's worth the shot. It's worth the shot to not stay bearish if you're bearish, to get long if you're bullish as a qualifier, as a fire and ready aim fire. But when you get an offer that's decent size that finally pukes or sells it, just think of your own trading. When you have to sell, all right, and the price is going away from you, which means lower in that case, and then you finally say screw it, and you just sell it at the market, and then bam, it rallies, and you're like, that figures, right? You sell it, and if you just would have waited, it would have rallied maybe higher and higher and got you a better fill. And that's you with your 1 lot, 2 lot, 5 lot, whatever size you trade, much less than these bigger orders that, and everybody loves big orders to think that they know something. They're doing things for a lot different reasons than we're doing it. They're not scalping and buying it just because they're bullish. They'd be putting on a spread. They could be hedging a cash position. A lot more reasons or different reasons than an outright trader, where when we're long, we're bullish. When we're short, we're bearish. And that's, or when we're buying, we're bullish generally. And when we're selling, we're bearish. But they could be buying and selling for a lot for many other reasons. But it's just like, that's what got the market to go down. Finally, it sold, kind of a little capitulation. And the best analogy or metaphor is a beach ball underwater. And it's the probability of having the best. That's what we said down here, not up here, but down here is the best chance to get our best bounce since the open. But you got to follow the progression. And when people talk about order flow, this is part of reading order flow.